Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 109, recorded here on March 31st, 2024, Easter Sunday. So happy Easter for those of you who celebrate. This podcast is for entertainment only and is not investing advice, so please do your own homework. We'll start with the market update and then get into the top Bitcoin news. Quite a bit to go over this week. So let's jump in. Benchmark S&P 500 on Friday advanced marginally for the holiday shortened week as investors remained on the sidelines amid quarter end positioning. On Good Friday, which was a trading holiday, the core personal consumption expenditures price index, the Federal Reserve's favorite inflation gauge, showed a deceleration in February. Later, Fed Chair Jerome Powell said at a San Francisco Fed conference that it was, quote, good to see something coming in line with expectations. Friday also marked the end of a stellar first quarter for Wall Street, with the S&P 500 surging about 10% and delivering its best Q1 since 2019. For the week, the S&P 500 advanced 0.4%, the blue chip Dow added 0.8%, and the tech-heavy NASDAQ composite slipped 0.3%. Looking ahead, market participants are looking to the jobs week for clues on the labor market. The latest job openings and labor turnover survey is scheduled for Tuesday, followed by ADP's private employment report for March on Wednesday. The main event will be Friday's U.S. non-farm payrolls data, with economists expecting an addition of 216,000 jobs in March. That would mark a deceleration from the 275,000 additions in February. In terms of Federal Reserve speakers, the spotlight will be on Central Bank Chair Jerome Powell, who will be delivering a speech on economic outlook at a Stanford forum on Wednesday. The earnings calendar is quite light next week, with jeans maker Levi Strauss and Canadian technology firm BlackBerry among the few notable names scheduled to report their quarterly results. Investors will also be watching out for monthly production and deliveries updates from major car makers, including a highly anticipated quarterly report from electric vehicle giant Tesla. Another important event to keep an eye out for is Walt Disney's annual shareholder meeting on Wednesday. The media and entertainment giant is locked in a proxy battle with Nelson Peltz's Trian Fund Management. Okay, looking ahead to now the top Bitcoin news. First, we will go over, this is from Bitcoin.com. This was posted yesterday. Blackrock spot Bitcoin ETF's holdings soar past 252,000 Bitcoin. CEO says he's, quote, pleasantly surprised by retail demand. Blackrock, the world's largest manager, has significantly increased the Bitcoin holdings for its spot Bitcoin exchange-traded fund, the iShares Bitcoin Trust, ticker symbol IBIT. The iShares Bitcoin Trust currently holds 252,011.40930 Bitcoin, representing an approximate notional value of nearly $18 billion. BlackRock CEO Larry Fink said this week that he's, quote, very bullish on the long-term viability of Bitcoin, noting that the iShares Bitcoin Trust is, quote, the fastest growing ETF in the history of ETFs, and also, quote, nothing has gained assets as fast as IBIT in the history of ETFs. The executive shared, again, quote, I'm pleasantly surprised, and I never predicted it before we filed it that we were going to see this type of retail demand. It's funny, too, because a few years ago he was saying it was for criminals, and now when he can make some money on it, changes his tune. So that should tell you everything you need to know about Wall Street. The U.S. Securities and Exchange Commission approved 11 spot Bitcoin ETFs, including IBIT, on January 10th. 10 of them began trading the next day. The last one, Hasdex Bitcoin ETF, which converted from a Bitcoin futures ETF, began trading this week. Robert Mitchnick, BlackRock's head of digital assets, recently emphasized that the firm's clients For the firm's clients, Bitcoin is overwhelmingly the number one priority, he further revealed, and then a little bit Ethereum and a very little everything else. So of course we don't want to own these. We want to own our Bitcoin in cold storage, but certainly the institutional demand is good to see and should help support the price. And also their marketing will spread the word and hopefully get people to learn more about Bitcoin and educate themselves on it. So on balance, probably a positive thing. This article is from bitcoinnews.com. This was posted today. Tim Draper reveals details of his 10-year Bitcoin investment. Legendary investor Tim Draper, renowned for his bold predictions and unwavering faith in disruptive technologies, has once again captured the attention of the digital asset world with astonishing revelations about his historic Bitcoin bet. Draper's recent disclosure sent shockwaves across the community on social media platform X, shedding light on the immense potential and transformative power of Bitcoin. The investor also recently predicted a total Bitcoin takeover, putting a price tag of $250,000 on the digital asset by 2025. In a candid statement, Draper disclosed that he had invested 300 Bitcoin in a startup focused on digital assets, securing a remarkable 4% stake in the undisclosed company. What's truly remarkable is the return on this investment. Over the course of a decade, Draper's initial bet yielded 15 Bitcoin, marking a remarkable 10x increase when measured in dollar terms. While some may perceive this return as modest, given Bitcoin's meteoric rise, Draper's strategic foresight underscores the profound wealth-building opportunities inherent in the digital asset space. The significance of Tim Draper's revelation extends far beyond mere financial gain. It reaffirms his belief in Bitcoin's long-term viability and its potential to revolutionize the global financial landscape. Draper has emphasized Bitcoin's resilience as a hedge against inflation. Tim Draper's bold prediction that Bitcoin could soar to $250,000 by 2025 has reached unprecedented levels of support following the debut of spot Bitcoin exchange-traded funds in the United States and the anticipated Bitcoin halving event. The convergence of these catalysts, the increased institutional adoption, supply scarcity, and heightened retail interest paints a compelling picture of Bitcoin's ascent to new heights. Draper's bullish stance finds resonance among other prominent figures in the digital asset space, with some envisioning even loftier price targets, such as a staggering $1 million per Bitcoin. The investor recently said in an interview with Bloomberg, eventually there's bound to be total Bitcoinization of the world, while adding, there will be a moment in time when I can buy my food, clothing, and shelter all in Bitcoin, and people won't want dollars anymore. Amidst this backdrop of optimism and anticipation, Andrew Tate, a controversial figure known for his fervent advocacy of Bitcoin, has emerged as a vocal proponent of the digital currency. In a recent social media post on the same day as Draper, Tate unveiled his disciplined Bitcoin dollar cost averaging strategy, emphasizing his unwavering commitment to accumulating Bitcoin over time. Tate's steadfast approach serves as a testament to the enduring appeal of Bitcoin as a store of value and a hedge against economic uncertainty. He said, I bought my first Bitcoin in 2018. Since then, I've been buying some Bitcoin every single week without fail. Meanwhile, the price of Bitcoin has been swinging between $60,000 and $70,000 since the digital asset made an all-time high earlier in March. As per market cap data, Bitcoin is up almost 9% in the past 7 days. Where were these guys in the bear market? I mean, come on, guys. Well, we were just patiently stacking through the bear market. Price targets, I don't even really care. I think I would just rather own Bitcoin just for its inherent value of being easily transported, easily used in commerce, and censorship resistant. So, what's the price for that? I don't know. All right, next up we have, this is from CoinDesk. This article was posted on March 28th. Kind of an interesting story here. Microstrategy slumps 14% after short seller says stock trades at an unjustifiable premium to Bitcoin. MicroStrategy shares fell as much as 14% on Thursday after a prominent short seller, Carisdale Capital, said in a report that it is short selling the stock while betting long on Bitcoin. Shares of MicroStrategy have soared amid a recent rise in the price of Bitcoin, but as is often the case with crypto, things have gotten carried away, the short seller wrote. None of the reasons cited for the stock's relative attractiveness justify paying well over double for the same coin, the report said. Software developer MicroStrategy's business model is based on the acquisition and holding of Bitcoin, and its crypto stash represents the majority of the company's valuation. The company now holds about 214,246 Bitcoins, which is more than 1% of all the 21 million Bitcoins that will ever exist. MicroStrategy's market cap is about 28 billion. Its Bitcoin holdings are worth about 15.2 billion. The report notes that the Bitcoin price currently implied by MicroStrategy's share price is 177,000, which is 2.5 times the spot price of the cryptocurrency. The days when MicroStrategy shares represented a rare, unique way to gain access to Bitcoin are long over, the note said, adding that Bitcoin is now easily obtainable through brokerages, crypto exchanges, and more recently, low-fee exchange-traded products and exchange-traded funds. MicroStrategy didn't respond to a request for comment before publication. Carisdale isn't the only investor selling shares of MicroStrategy short. Total short interest in crypto stocks is 10.7 billion, with MicroStrategy and Coinbase making up 84% of the bearish bets, according to a report from S3 Partners. So, they have a point, but I guess, you just got to be careful because shorting MicroStrategy, and then if Bitcoin continues to run up in the bull market, is only going to cause a short squeeze, and it's going to cause MicroStrategy stock to go even higher. I think if you own MicroStrategy and you bought it maybe a year or two ago, you're sitting on some nice gains. There's really no reason to sell it. It functions as an ETF in the sense that you're primarily buying exposure to Bitcoin, but it's also an operating company, and they continue to make money, cash flow, which they then leverage to buy more Bitcoin, and they continue to vacuum up more and more Bitcoin, and then they can also issue shares. They can issue convertible debt and all this other stuff. So they have a lot of tools that the ETFs don't really have to grow their Bitcoin holdings. And of course, there's no fees. You're not paying whatever it is, 25 basis points, 50 basis points, whatever these ETFs charge. So, did it get out ahead of itself? Probably. And that's going to happen from time to time. But yeah, I don't know if I'd be jumping in right now, but it's a reasonable allocation to have. But of course, the best thing is just to simply own Bitcoin and cold storage. But if you like investing in stocks, that's certainly an interesting one. Although maybe wait for it to go down a little more. Next article is from Bitcoin.com. This was posted yesterday. We're just going to keep going with the bullish theme here. Bitwise sees raging Bitcoin bull market, expects April halving to be the most impactful we've seen. Of course, these guys sponsor an ETF, so you got to be a little skeptical that they might be talking their own book. But the CEO and CIO of Bitwise Asset Management discussed Bitcoin outlook and the upcoming halving event this week. Bitwise launched a spot Bitcoin exchange traded fund in early January after the US SEC approved 11 spot Bitcoin ETFs. In an excerpt from his weekly memo to investment professionals, Bitwise CIO Matt Hugin noted that in the short term, Bitcoin seems likely to chop sideways on small changes in sentiment. However, he emphasized long term, we believe Bitcoin is in a raging bull market. Not only is it up nearly 300% in the past 15 months, but there are strong reasons to think that it will continue, he clarified. The January launch of spot Bitcoin ETFs opened up the crypto market to investment professionals in a major way for the first time ever, he explained. These investors control tens of trillions of dollars. Globally, the best estimate is over 100 trillion. and they are just starting to move into crypto. This is a process that will take years, not months. He opined, imagine global wealth managers allocate just 1% of their portfolios to Bitcoin on average. A 2.5% allocation to Bitcoin has enhanced the traditional 60-40 portfolio's risk-adjusted returns in every 3-year period in Bitcoin's history. Haugen continued, a 1% allocation across the board would mean $1 trillion of inflows into the space. Hunter Horsley, co-founder and CEO of Bitwise Asset Management, explained on social media platform X this week why he believes the upcoming Bitcoin halving will be the most impactful one so far. The April 2024 halving may be the most impactful we've seen, he wrote. Why? The last Bitcoin halving, 2020, Bitcoin was at $9,000, so the supply reduction in dollar terms was $9 million a day and $3 billion a year. The executive noted that this halving with Bitcoin at 70,000 will be about 3 times greater in dollar terms, $32 million a day and $11 billion a year, a much larger reduction of natural selling at the same time as we were seeing rising demand. So, yeah, I can't argue with that. I mean, certainly the math works. And if you think about it in dollar terms, and the natural seller of Bitcoin is going to be the miner. And if the miner's able to get the same amount of dollars by selling less Bitcoin, then there's going to be, in theory, less sell pressure. They could theoretically keep more on their balance sheet unless they were trying to grow their business or something like that. So very interesting. Next up, we'll get into some, I guess we'll call it legal and regulatory news. This one is from Bitcoin.com, BitcoinNews.com. This was posted on March 29th. Probably already heard about this, but if you haven't, Sam Bankman-Fried slapped with a 25-year sentence in landmark case. In a significant development, Sam Bankman-Fried, the founder of the now defunct exchange FTX, has been handed a 25-year prison sentence following his conviction on multiple charges, including fraud and money laundering. Sam Bankman-Fried's sentencing, presided over by Judge Lewis A. Kaplan in Manhattan Federal Court, brings to a close a case that has shaken the foundations of the digital asset industry. The sentencing took place amidst a backdrop of high stakes, with Bankman-Fried facing the possibility of a much longer sentence, with prosecutors suggesting up to 110 years behind bars. This verdict follows the turbulent events that led to the sudden downfall of FTX in November 2022, as Bankman-Fried, once heralded as a billionaire, faced a high-profile trial later in 2023. In addition to the prison term, Judge Kaplan ordered Bankman-Fried to forfeit more than $11 billion and recommended his incarceration at a facility near his parents' home in California. Judge Kaplan expressed concerns over the potential risks posed by Bankman-Fried's actions in the future. He stated, "There is a risk that this man will be in a position to do something very bad in the future, and it's not a trivial risk at all." Prior to the sentencing, Bankman-Fried's lawyer, Mark Mukasey, delivered a passionate plea for leniency, highlighting his client's charitable contributions and effort with stolen money, and efforts to assist fellow inmates in obtaining educational degrees during his time in jail. Oh, that's nice. Sam is an incredibly kind-hearted and generous person. Well, of course, when he's also very generous with political donations too, but he never got a trial for that, did he? And that was also stolen money, stolen from his investors. So, but we're not going to talk about that now. Who may not always demonstrate all the social norms, but is giving and selfless beyond most norms. He doesn't make decisions with malice in his heart. He makes decisions with math in his head. However, the portrayal of Bankman-Fried as a socially awkward benefactor was met with skepticism by the judge and prosecutors. Assistant U.S. Attorney Nicholas Roos dismissed the defense's characterization of Bankman-Fried, asserting that criminality pervaded his business dealings. Roos stated, "While the line sounds good, it's troubling because what it says is if Mr. Bankman-Fried thought the mathematics would justify it, he'd do it again." Throughout the trial, prosecutors painted a damning picture of Bankman-Fried's role in a years-long fraud scheme that siphoned around $10 billion from customers, investors, and lenders. Despite his claims of being a victim of market downturns, Bankman-Fried's denial of knowingly committing fraud did not sway the court, as Judge Kaplan handed down the substantial prison sentence. The sentencing reflects the court's ongoing commitment to holding individuals accountable for their involvement in significant financial fraud, irrespective of apologies. Notably, before his sentencing, Bankman-Fried extended an apology to those impacted by FTX's collapse, including customers, investors, and employees, acknowledging the widespread loss of trust and financial turmoil. Bankman-Fried's reaction to the sentencing was one of stoic acceptance as he stood in a tanned prison jumpsuit while the sentence was read out. The downfall of FTX serves as a cautionary tale of unchecked financial practices within the digital industry. The response to this sentencing has been varied, with some considering it a vital step towards achieving justice for the victims affected by FTX's downfall. He's probably going to get off early on good behavior, so I doubt that he's going to be in prison for 25 years. It's probably going to be 5 to 10. And, we'll see what he does when he gets out. But on the one hand, he definitely crashed the Bitcoin price. So for stackers and hodlers, it was a bit of a gift, as long as you had the conviction to keep buying during that time. But he did destroy a lot of people, and if you were holding self-custody coins at that time, you were feeling pretty good because you didn't care if the exchange didn't have your coins. So it's interesting because a lot of people probably haven't learned the lesson about trusting centralized exchanges even from this. But anyway, at least he got some jail time, but he should have gotten, I think it was up to 150 years for everything. And he didn't even, as I mentioned earlier, he didn't even have to do a trial for the political donations that he spread around all of Congress, probably because they didn't want to embarrass anybody by that. So they just kind of buried that one, which is a little bit disappointing too. Yeah. Meanwhile, Ross Ulbricht is in jail. Julian Assange is being held in, for telling the truth. And, this guy's, we'll see. He'll be out in 5 to 10. That's my prediction. Okay, next up we have, this is also from bitcoinnews.com, one of my favorite sources. It's actually quite good. March 31st is when this was posted. UK court freezes Craig Wright's assets amid Bitcoin creator claim. In a significant legal development, a UK court has taken decisive action against Craig Wright, an Australian computer scientist who is claimed to be the creator of Bitcoin, Satoshi Nakamoto. Judge James Mellor imposed a worldwide freeze on £6 million of Wright's assets. This asset freeze order aims to prevent him from evading court expenses tied to his assertion of being Nakamoto. A little background here. The legal saga surrounding Craig Wright began when the Crypto Open Patent Alliance, an organization dedicated to advancing digital asset technologies, challenged Wright's claims of being Satoshi Nakamoto. COPA filed a lawsuit against Wright in April 2021, contesting his assertions of being the Bitcoin creator and thereby possessing copyright to Bitcoin. In a landmark decision rendered on March 14th, Judge Mellor delivered a verdict that dealt a severe blow to Wright's claims. The judge not only debunked Wright's assertions of being Nakamoto, but also concluded that Wright did not author the Bitcoin white paper or the initial versions of the Bitcoin software. This ruling was the culmination of a trial that commenced on February 5th, 2024, where testimonies from early Bitcoin developers were pivotal in establishing Wright's lack of credibility. Wright then informed Companies House in the UK that shares in his RCJBR holding company were transferred to De Morgan, a Singapore-based entity. Following the court's verdict, concerns arose regarding Wright's attempts to evade the financial consequences of his loss. In a move perceived as an attempt to circumvent court expenses, Wright transferred shares of his London-based firm, RCJBR Holding, to a Singaporean entity on March 18th. This action prompted COPA to urgently file for a worldwide freeze order to prevent asset dissipation. Judge Mellor, acknowledging COPA's strong claims for substantial costs and Wright's history of defaulting on payment orders, endorsed the freezing order on £6 million of Wright's assets. Dr. Wright has a history of default in relation to orders for the payment of money, stated George Mellor in his judgment. He further emphasized the risk of asset dissipation, stating Copa has a very powerful claim to be awarded a very substantial sum in costs. I consider there is a very real risk of dissipation. Judge James Mellor added, in the document, yesterday I granted a worldwide freezing order in the sum of £6 million on an application brought by the Crypto Open Patent Alliance against Dr. Craig Wright. Understandably, that gave rise to serious concerns on Copa's part that Dr. Wright was implementing measures to seek to evade the consequences of his loss at trial. Judge Mellor's statement indicates that although detailed arguments on costs have not been presented, it's clear that Copa and the developers are the winning party and are highly likely to be granted their costs. Moreover, it's probable that these costs will be awarded on the indemnity basis. After considering Copa's cost arguments and anticipating potential counter-arguments from Dr. Wright, the judge determined that the appropriate amount for the worldwide freezing order was £6 million. The legal battle between Wright and Copa has garnered attention from key players in the Bitcoin industry. Copa, consisting of 33 members, including prominent entities like Coinbase, Meta, and Microstrategy, has been steadfast in its pursuit to challenge Wright's claims. The Bitcoin Legal Defense Fund also weighed in on the matter, highlighting the importance of protecting the integrity of Bitcoin's development process from frivolous lawsuits. The UK court's decision to freeze £6 million in Craig Wright's assets marks a significant development in the ongoing dispute surrounding the identity of Bitcoin's creator. With Judge Mellor's ruling, Wright's claims of being Satoshi Nakamoto have been unequivocally refuted, paving the way for Copa to pursue legal remedies for the expenses incurred during the trial. As the Bitcoin community awaits further developments, this case underscores the importance of accountability and transparency in the realm of digital currencies. And I think also probably the most important thing about this win is that Craig Wright will now no longer be able to harass the Bitcoin Open, the developers basically of the protocol, because what he was doing was he was, suing them and, was making them not really want to do work on Bitcoin, which is not good because it's an open source protocol. It needs developers working on enhancements. So anyway, that's good news. This next article, not really Bitcoin related, but we do kind of keep an eye on this Tornado Cash trial because it has implications for privacy and the ability to actually have privacy when you transact in digital currencies, Bitcoin, etc. And coin mixers are one of those things that allow that. But of course, it's being attacked because, of money laundering and, terrorism and all that other stuff that is always trotted out. So this article's from dlnews.com. Aleksey Pertsev's lol about Ronin hack questioned in Tornado Cash trial. When Aleksey Pertsev learned that the $625 million hack of Ronin Bridge in 2022 took 5 days to discover, he responded, lol. On day one of the Tornado Cash developers' criminal trial in the Netherlands on Tuesday, this piece of evidence emerged as prosecutors sought to show that the 30-year-old Russian was well aware the crypto mixer was laundering dirty money from DeFi heists and hacks. The proceeds from the heist were laundered through Tornado Cash, which has been sanctioned by the U.S. government. On Wednesday morning, the public prosecutor wasted no time in bringing up Pertsev's response to the hack as evidence he was not concerned about crime. Pertsev, 30, who is facing potential 64-month prison sentence if he's convicted, testified that he was disappointed criminals used Tornado Cash to conceal illicit gains, but there was nothing he could do about it, he told the three-judge panel in English, which was translated into Dutch. The technical nature of decentralized crypto mixers running on immutable smart contracts made it hard, if not impossible, to police Tornado Cash the way traditional online financial firms do. Even so, the judges pressed Pertsev on whether he was taking crime seriously enough. They considered evidence produced by investigators after they confiscated Pertsev's devices and brought up his chat histories. In a group chat with co-developers Roman Storm and Roman Semenov, Pertsev allegedly responded to news of the $625 million Axie Infinity Ronin Bridge hack with lol. But Pertsev said on Tuesday that it doesn't mean he thought it was funny. I have a habit of using it to express surprise, he told the judges, and he testified that he was not consciously aware of people with bad intentions were abusing the protocol. I cannot take full responsibility, just me, for what is happening, he said. I don't believe it is fair. Pertsev is a Russian national living in the suburbs of Amsterdam. Dutch prosecutors allege Pertsev facilitated the laundering of $1.2 billion of illicit funds through Tornado Cash, a decentralized protocol which obfuscates crypto transaction history between 2019 and 2022. Pertsev's arrest in 2022 rang alarm bells for DeFi and open source developers around the world who have since rallied to his side. The outcome of the trial may very well determine if software developers will be held accountable if criminals use their code. And again, this has implications for the whole open source software movement, which is another reason to pay attention to it, because if you create something and then put it out in the wilderness and it's can be used by anyone freely, uh, it's sort of like Bitcoin. Bitcoin can be used by your enemies, and it can be used by your friends, and that's just the nature of open source, and also somewhat like freedom of speech, which is software. You could argue is speech. The modest courtroom in the Dutch city of Hertogenbosch was half filled. Pertsev is being tried by a three-judge panel rather than a jury, which is customary in the Dutch legal system. The day was dedicated to the judge's questioning. On Wednesday, the prosecution and the defense are presenting more testimony. A picture of King Willem-Alexander, a national symbol for the rule of law, adorned the wall behind the judges who will rule in what appears to be the most important case in crypto's short history. Aside from cultural differences, language proved a challenge in the proceedings, especially when it came to blockchain technicalities. A stoic and reserved Pertsev wearing a white polo sweater sat with his defense lawyer on one side and alternating Russian and English interpreters on the other. They translated questions from the judges, and at times the clash of languages created a sense of tension and confusion, further slowing down the proceedings. It is a disfavor to do it half broken English, half broken Russian, and then mix in crypto terms plus Dutch translation. Eleanor Blank, founder of Crypto Canal Community in Amsterdam and a key figure supporting Pertsev, told DL News. And then this is a quote from Aleksey: "It is not a criminal source of income, so I can use it in any way I want." The case could turn on whether prosecutors believe Pertsev intended to launder cash from unlawful activity in Tornado Cash's crypto mixer and what they did about it when they found out. To that end, the judges probed Pertsev to determine whether he and other key developers benefited from Tornado Cash and how much control they really had over the way it operated. 5 developers, including Pertsev, were allocated 30% of the native token, TORN, which gives them additional voting power for decisions on the protocol. Pertsev said he doesn't consider the tokens as a reward, but rather as a distribution of voting power to those who contributed to the project. The judges also pointed out that Pertsev used his Torn tokens to buy a Porsche and asked whether he benefited from token airdrops. "It's not a criminal source of income, and I can use it any way I want," Pertsev said. Amin Soleimani, a prominent Ethereum developer who watched the trial, said there were cultural barriers between the defendant and the panel of judges. "There's nothing anybody can do to prevent people from interacting with the smart contracts," he told DL News. "Even if you take down the user interfaces, people can still use them through command line tools, Etherscan, and other UIs. The contracts will still be there." Yet the Dutch Fiscal Information and Investigation Service officers had found that 93.5% of users access Tornado Cash through the main website. Nonetheless, Pertsev was trying to explain to the judges that there's no way Tornado Cash could impose a Know Your Customer protocol for users. "I don't think this is something that the judges understand, or maybe it's something they don't want to understand," Soleimani said. Tornado Cash introduced a compliance tool in June 2020 that users could choose to use to prove their transaction history was clean. One of the judges was skeptical. Criminals can relatively easily go through Tornado Cash unobserved, she argued. The defense argued that it is up to exchanges where funds from Tornado Cash ultimately to cash out to recognize bad actors. If crypto comes from Tornado Cash, then they can see it immediately and they have an automatic system to flag it, Keith Chang, Pertsev's lawyer, told DL News following completion of the day's testimony. Other Bitcoin mixers try to hide the fact that the funds even come from a mixer. My client did his very best to explain a very complex situation and project. This is a quote from Keith Chang, Aleksey Pertsev's lawyer. But regulated financial institutions, which must comply with strict anti-money laundering laws, should bear responsibility for checking that criminal funds are brought onto their platforms, he said. Unlike a centralized exchange, Pertsev does not have control or oversight over Tornado Cash users. My client did his very best to explain a very complex situation and project. The judges asked if Pertsev was compelled to distance himself from Tornado Cash when he realized hackers were abusing the mixer. Pertsev said he was confused and did not want to answer the judge's query. On some occasions, Pertsev responded to questions after a break. But when asked about why to open source a protocol, he laid down the philosophy. And this is probably the most important part of the article. We have to have a way to share ideas and their implementation. This is why smart contracts are open, Pertsev said. Then other people can verify after me what kind of contributions I made. So something again to watch, since this has some pretty significant implications, I think on Bitcoin too, because there are Bitcoin mixers that are out there and could be impacted by whatever comes out of this. So we will continue to watch. Next up, this is for bitcoinnews.com. More regulatory news. This was posted today. Custodia Bank denied Federal Reserve master account by U.S. court. In a recent legal battle, Custodia Bank, a digital asset bank based in Wyoming, has faced a setback in its quest to obtain a Federal Reserve master account. This crucial asset allows banks direct access to the Federal Reserve's payment systems. Analyzing details of this case could highlight its implications for Custodia Bank. Custodia Bank's attempt to secure a Federal Reserve master account hit a roadblock as the United States District Court ruled against its bid. The decision handed down by Judge Scott Skobdal dismissed Custodia's plea for a declaratory judgment, highlighting the court's stance on the matter. It argued Custodia is not entitled to its requested writ of mandamus, compelling FRBKC to issue its master account, and summary judgment on Claim 2 must be granted in FRBKC's favor. Custodia Bank argued vehemently for its entitlement to a Federal Reserve master account, citing concerns over competitive disadvantage without it. The bank contended that not having this account limits its operations, rendering it dependent on intermediary banks and positioning it as a second-class citizen in the banking sector. The bank stated without a master account, if Custodia is able to operate at all, it is a second-class citizen relegated to dependency on and fealty to an intermediary bank. The legal tussle dates back to Custodia's initial application for a master account in October of 2020. However, the Federal Reserve Bank of Kansas City rejected Custodia's application in January 2023, citing concerns over the bank's involvement in digital asset-related activities. Judge Skabdal's ruling underscored the discretion it afforded to the Federal Reserve in granting master accounts. He emphasized that the law does not mandate the Federal Reserve to provide master accounts to every eligible depository institution. This ruling could have significant implications for Custodia Bank's operations and its vision of integrating digital assets within regulated banking frameworks. The judge wrote, thus, unless Federal Reserve banks possess discretion to deny or reject a master account application, state chartering laws would be the only layer of insulation for the U.S. financial system, and in that scenario, one can readily foresee a race to the bottom among states and politicians to attract business by reducing state chartering burdens through lax legislation, allowing minimally regulated institutions to gain ready access to the central bank's balances and Federal Reserve services. Despite the setback, Custodia Bank remains resilient, expressing its intention to explore all available options moving forward. Nathan Miller, a spokesperson for Custodia Bank, emphasized the company's commitment to its vision, stating, challenging the Fed's strong-arm tactics has always been an uphill battle, but Custodia Bank remains committed to our vision of creating a safe, tech-enabled bank. We are reviewing the court's decision and all of our options, including appeal. As Custodia Bank navigates through this aftermath of this legal ruling, the future remains uncertain. However, the bank's determination to continue to fight underscores the significance of this case and evolving digital asset banking landscape. And what's interesting about Custodia, and I think I've talked about this in the past, is their model is basically 100% reserve. So what they want to be able to do is allow you to, say, deposit Bitcoin with them, and they will basically keep it. And they won't loan it out. They won't hypothecate it. It'll just be there. And so there'll be 100% reserve. And I think the Fed doesn't like that because that might actually appeal to people and they might actually start moving their money into a 100% reserve bank versus a 0% reserve bank, which is all the other banks, because they're not required to hold any of the funds that are deposited in reserve. So if there's a bank run, the money's not there. And then, you have to go to the Fed to basically, or the Treasury or somebody to decide whether or not customer deposits are going to be honored or not. So I think that's kind of the big thing that the Fed doesn't like. And of course, I don't think they like directly connecting Bitcoin with the banking system either. So, but we wish them luck in their battles ahead. Seems like they're not ready to give up. Next article is from Crypto Potato. This is posted on March 30th. Bitcoin has more users than the internet in 1997. Here's why that's bullish. A meme began making its way around crypto Twitter earlier this month, pointing out that Bitcoin now has the number of active users that the internet had in 1997. Yeah, 1997. But the reality is even more interesting. Bitcoin most likely has far more users today than the internet had the year Amazon debuted on Wall Street. That means Bitcoin investors may be running out of time to capitalize on stellar market returns driven by growth in user adoption. The economics of this trade are fascinating and promising to investors who note that even if 1 billion or 5 billion more people adopted Bitcoin, there will still never be more than 21 million Bitcoin in existence held on the original Satoshi blockchain. That may have something to do with the remarkable rise in the digital assets market value. In January, crypto exchange Crypto.com reported there are 580 million crypto users worldwide. An annual survey of cryptocurrency owners by security.org consistently found above three-quarters of owners reporting they own Bitcoin. So there may be something like 435 million Bitcoin users in 2024. Meanwhile, there were actually far fewer than 140 million internet users in 1997. There were 70 million people online, though the year the Miami Marlins won the World Series. 1997 was an important year for the internet for many reasons. One of them was the Amazon IPO at $18. If you'd invested $4,000 to buy Amazon shares during the internet dot-com boom in 1997, by last year, that would have become worth some $7.3 million. But if you'd invested it in the S&P 500 like Warren Buffett recommended to investors, then you would have had $20,800 to show for it last year. He has also warned investors to stay away from Bitcoin and cryptocurrencies and stick to the S&P 500 ETFs, much to the detriment of their returns. Here's another one he would tell you to stay away from in favor of his favorite internet and computer businesses, Amazon and Apple shares. The Internet Computer just recently crossed $17 per network token with a market cap above $8.5 billion on Tuesday. Internet Computer's decentralized cloud is a rival to $1.8 trillion Amazon's cloud computing business. According to a report by CNBC, analysts said Marketplace could be delivering $1 to $2 billion in revenue, which would work out to 3% of AWS total 2020 revenue. Internet Computer hosts cloud services on its own network of devices built to various ICP blockchain standards. That sounds like a shitcoin, so I'd probably ignore that part of this. But anyway, I'm going to actually probably do an update on Bitcoin adoption in my blog in the next few weeks. So keep an eye out for that. But it's good to sort of monitor how things are progressing and how early are we? Yeah, who knows? I don't know. Are we super early? Are we kind of early? It doesn't really matter. It's really just about where do you want to put your life's energy to save, and how much risk are you willing to take? Do you want to gamble in the stock market? Do you not want to gamble in the stock market? You certainly can't put your money in a bank. They're not going to pay you anywhere near what the rate of inflation is, and they can freeze or take your funds at any time, and the bank could go bust. So it's not really safe, and neither are U.S. Treasuries because of inflation, and they're not really paying enough interest to cover that. So I'll just take my Bitcoin, and I don't even really care about the gains. I think it's just as long as I can buy the same amount of stuff in 10 or 20 years as I can buy today, I'm good. All right, and then we're going to finish up with a little piece. This is actually, I've been covering this each week. This is from Bitcoin Magazine. It's their series called 10 Steps to Self-Sovereignty. This segment is called the InfoSec Basics, How to Keep Your Bitcoin Seed Phrase Secure, which I thought was a good little reminder for all of us. So I'm going to go through that here. When it comes to self-custodying your Bitcoin, there is one inescapable fact. The buck stops with you. You are responsible for your own funds. You are responsible for keeping them safe. You are responsible for everything. This can be a daunting prospect, but there are ways to approach self-custody simply. Securing your Bitcoin can be thought of similarly to building a house. First, you have to lay a foundation, then you build a frame on top of that. From there, you fill in the walls, insulation, utilities, etc. For each piece of the house you want to add, you need to have completed the previous piece properly, or the entire house will be unsafe and unstable. When it comes to Bitcoin security, your seed phrase is the foundation of your security. It is simultaneously the most important yet potentially weakest point in security. Just like the foundation of a house impacts its stability, your seed phrase impacts your wallet's security. So how do you store a seed phrase securely? Here are some core considerations to take into account when figuring out how to secure your seed phrase. Your seed phrase is your money. Every private key needed to authorize spending, every address, and every Bitcoin account in your wallet, all of these pieces are generated from your seed phrase. Anyone who has access to your seed phrase has access to any funds stored in that wallet. Thus, creating and securing a backup of the seed phrase is imperative. If something happens to your hardware wallet or the device you installed your software wallet on, your only hope is your seed phrase backup. If you lose that seed phrase backup, your money's gone. Your money is accessible in two ways when self-custodying your funds, either the wallet you're using or your seed phrase backup. Your Bitcoin wallet protects a copy of your keys on that device, but it can't help you protect the seed phrase backup. No one should be given access to your seed phrase. As cold and callous as that sounds, you can't be sure they will handle it responsibly. They can still misplace a copy of your seed phrase or leave it lying around unsecured without any malicious intent on their part. So rule 1, never share your seed phrase with anyone. Any exception to this rule under any circumstances should be thought through long and hard before breaking it. After all, being too trusting could put your Bitcoin at risk. It is critically important to avoid recording your seed phrase in any digital format. Computers are incredibly complicated machines and thus are prone to a litany of security issues. People's devices are hacked on a regular basis. Copies of your seed phrase can be put at risk when stored digitally. In short, your laptop or smartphone is vulnerable to malware and spyware. If a hacker gains access to your device, they may be able to read your files and extract your seed phrase from any type of digital storage they can access. For this reason, you should avoid storing your seed phrase digitally. This goes especially for storing anything in a remote digital service like a cloud storage provider. If your email account was ever compromised, the hacker could use your credentials to log into any cloud storage device and access your seed phrase. Under no circumstances should you ever store your seed phrase on a cloud storage site such as iCloud or Google Drive. Take pictures of it with your phone or other digital camera. Send it over any digital medium such as email or text message. Enter it into anything but the Bitcoin wallet you're using. Handle it in front of any camera. Say it out loud near a microphone. The only copy of your seed phrase should be physical and completely isolated from the internet. This is why keeping sizable amounts of Bitcoin in a software wallet on your computer or mobile phone is not recommended either. To put it simply, your internet-connected devices are vulnerable to hackers. Thus, if you want to keep your Bitcoin safe, you should invest in a hardware wallet. One important decision should jump out at you when it comes to making a backup of your seed phrase. What do you write it on? This may seem like a silly question if you're new to this space, but unless you stop using Bitcoin, you will need to secure your seed phrase for the rest of your life. Durability is incredibly important. You could just write your seed phrase on a piece of paper and stuff it in a drawer, but how long will that stay safe? Paper is flammable. It degrades. If you spill water on it, the ink could bleed and your backup could become unreadable. Paper is not suitable for longer-term storage. Metal is a much better option, and numerous products on the market are designed to store your seed phrase on metal. Some solutions use tiny individual metal tiles with letters on them, so you can slide them into a frame and lock them in place to record your words, such as the billfold. Metal tile backups are reusable, so over time, if you generate a move to new wallets, the same backup kit can be reused for the new seed phrase. It's also possible to destroy your backup easily if needed by removing the tiles. If you move somewhere, you can't take your backups with you because of the risk of someone else finding them. For example, going through an airport, you might not want to leave your backup intact. Other metal backups use etching tools to scratch or impress the words directly into a flat metal surface, providing even stronger protection against threats like fire. This is extremely secure, but destroying a copy of your seed phrase etched into metal is extremely difficult. To really be certain it is destroyed, you have to grind down the entire face of the metal plate until no trace of the words are left. Lastly, there are capsule-based solutions. These use little steel tiles with letters on them, but instead of sliding them into a flat frame, they are loaded into a steel tube around a rod to hold them in place. This can give the benefits of reusability while ensuring that any fire warping does not scatter and dislodge the letter tiles. When picking between metal tiles or steel plates, weigh the pros and cons of both carefully, but remember, use something metal. Don't trust your Bitcoin to a flimsy piece of paper. Now that we've established how to store your seed phrase, where should you store it? Keeping the seed phrase on a robust piece of material is important, but so is keeping it in a place that is difficult to access physically. It should be stored somewhere you can keep locked, such as a safe or a lockbox. A safe is better than a lockbox, as that is bulkier and harder to physically carry. A safe attached to a wall is even better yet, requiring the destruction of a wall to remove the safe. If you don't have a safe or a lockbox, keep your seed phrase out of sight. Put it in a filing cabinet or desk drawer in a room not accessible to other people. The important part is making sure that wherever it is, no one else can access it. You might not have a single place that can be safely secured to house your backup seed phrase. Two options exist that can allow you to maintain a safe backup without keeping your seed phrase in a single location. If you're considering splitting your seed phrase backup, follow a well-known protocol or don't do it at all. Seed XOR is one mechanism. It is a process that allows you to take a pre-existing seed phrase and split it using a mathematical process into two or more new seed phrases. These new seed phrases are fully valid and can later be recombined to regenerate the original seed phrase they were created from. This allows you to divide your seed phrase into pieces and store it in multiple locations. It is very important to keep in mind, though, that you must have 100% of the split seed phrases. If you lose a single one, you cannot regenerate the original seed phrase. A big benefit of XORing is that you can do it by hand. The second is Shamir secret sharing. Similar to seed XORing, SSS breaks your seed phrase into multiple pieces, but it uses a very different mathematical process to do so. Unlike seed XORing, Shamir shares allows you to recover your original seed phrase with less than 100% of the shares. It can be set up like a multi-sig, i.e. as long as you have 3 of 5 backup shares, you can regenerate your seed phrase. The only downside is that only certain wallets support using Shamir and it cannot be done by hand. Under no circumstances should you split up your seed phrase manually. If you're not following a safe and widely scrutinized protocol like seed XOR or Shamir secret sharing, don't even consider it. Naively splitting your seed phrase into multiple pieces can drastically reduce the security of your Bitcoin. Guessing 12 or 24 words randomly and happening to guess someone's seed phrase is statistically impossible, but if someone has 4 of those words or 6 of those words, it starts actually becoming practical to guess the rest of your seed phrase. Another alternative, if you use a ledger, is the Ledger Recover service. This paid optional service uses a variant of Shamir's secret sharing called Pedersen Verifiable Secret Sharing. This allows you to backup access your wallet without a seed phrase and going through an identity verification process with your government ID. If you're in a situation where you do not have a secure place to store your seed phrase backups, alternative solutions exist. Wallets and services such as Unchained, Casa, and Nunchuck Wallet offer multi-sig solutions where a third party can hold one of your keys for you. For instance, if you have 2 of 3 multi-sig, they can hold one key. This ensures that as long as you don't lose both of the keys you keep yourself, they can assist you in moving your funds to a new wallet. At the end of the day, securing your Bitcoin is your responsibility. It is something you need to take seriously and put in the proper effort to maintain. No one is going to come and save you if you don't take it seriously. As Gandalf warned Bilbo in Lord of the Rings, keep it secret, keep it safe. That is your job as a Bitcoiner, to keep your seed phrase hidden from other people and safe from those who would wish to take it from you. The simple advice in this article is the vast majority of what you need to accomplish that. Don't try to reinvent the wheel. Just record your seed phrase on a durable medium like metal and keep it physically safe from prying eyes and thieving hands. Keep it locked in your safe or a room other people do not frequently access. Check on it from time to time. That's all you have to do. Don't overcomplicate things in your head. Just keep it simple and your Bitcoin will be safe. So great piece here. A lot of good advice and some good reminders on safety and security of your seed phrase. Finally, I just wanted to highlight this week's post, featured post on Bitcoin Fortress, my Substack. It's entitled The 2008 Global Financial Crisis, Shifting Debt and the Rise of Bitcoin, and I will include a link to that in the show notes, along with links to everything else that we went over today. And with that, thanks for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. I like to listen to all of my podcasts on Fountain, where I can earn sats just for listening, so might as well. You can also follow my Substack. It's located at bitcoinfortress.substack.com. And if you want to follow me on socials, I am only on Nostr only, and my NPub is included in the show notes. And with that, I will talk to y'all next week. Bye-bye.